All right, so you want the inside scoop on Monday.com's latest earnings call, but you don't have time to listen to the whole thing.
Well, you've come to the right place.
We're Talk Tickers, and on this deep dive,
We're going to be breaking down
Monday.com's Q3 2024 performance.
Yeah, think of this as your cheat sheet.
To sounding like you actually listened to the whole thing.
The whole thing?
But in way less time.
Way less time. Okay, so let's jump right in.
Let's dive in.
What's fascinating here is they just hit a huge milestone.
Huge milestone.
They crossed the $1 billion annual recurring revenue mark this quarter.
Okay, so back up a second.
Yeah.
For anyone who isn't fluent in Wall Street jargon.
Annual
recurring revenue, or ARR.
AR.
Is basically the yearly value of their predictable subscription revenue.
Yep.
So hitting $1 billion.
That's not just a vanity metric.
That's huge.
It puts them in the big leagues.
Big leagues.
And it's a 24-fold increase from their 2022 revenue.
24-fold.
That's insane.
That kind of growth it's pretty remarkable.
It is remarkable, and it shows you they've tapped into some serious demand.
Serious demand, yeah.
Investors are paying attention.
Right, but here's the thing.
The market didn't exactly throw them a party.
Not exactly.
Their stock actually dipped about 15% after the call.
About 15%?
So what gives... Are investors just being fickle?
Well,
or is there something deeper?
The dip kind of reveals some underlying concerns about their future growth prospects.
Future growth, right.
I mean, they're killing it now. But can they keep up this pace?
Right, that's the question.
That's the multi-billion-dollar question.
And that's making some investors hesitant.
A little hesitant.
And that brings us to a key figure that sheds some light on this whole concern.
Yeah.
Net revenue retention.
Or NRR.
NRR. This metric tracks how well a company is keeping and growing its existing customer base.
Existing customer base.
Why is that so important?
Well, because it's way more cost-effective to expand within your current customer base, right? It's much cheaper to keep a customer than to find a new customer.
Exactly. It's all about building those long-term, high-value relationships.
Yeah, and remember a while back...
There were some whispers about their retention dipping.
Dipping a little bit.
Which definitely spooked investors.
Spooked investors, yeah.
But this quarter, their NRR bounced back. To a very healthy 111%.
111%.
It's healthy.
Okay, so break that down.
Okay, so that means that on average...
Average customer.
Their existing customers are not only sticking around... But they're spending 11% more than they did last year.
More.
That's huge.
So that's a sigh of relief for investors.
Huge sigh of relief.
It is. And it's a strong signal that they're doing something right.
Definitely.
When it comes to keeping their customers happy and engaged.
Happy and engaged.
Speaking of keeping customers happy... Let's talk about their new product in beta.
Okay.
Monday Service.
Monday Service.
It's aimed at streamlining service management. And even though it hasn't officially launched, it's already making waves.
It is. And what's really remarkable here...
That's remarkable.
...is over half of the paying users for Monday Service are coming from their existing customer base.
Oh, wow.
They're not having to, throw tons of marketing dollars at it.
No.
Existing customers are seeing the value and they're buying in. That's big.
That speaks volumes about the trust they've built.
And the stickiness of their platform.
Okay.
Yeah.
Now let's talk about their pricing power, because this is where Monday.com is really flexing. They've been steadily rolling out price increases.
Yep.
And it's working. They're projecting a $30 million revenue bump in 2024.
Just from pricing alone.
And
they've hinted that more increases are on the horizon.
What does that tell you?
It tells me they've carved out a strong position in the market.
Strong position, okay.
They're not just another commodity player.
No.
They're offering something unique and valuable.
That customers are willing to pay more for.
Exactly. Think about it.
Yeah.
If your customers are willing to absorb price increases.
Absorb those increases.
It means they see real value in what you're offering.
Real value.
And
speaking of value,
they're landing some big fish.
Their
second largest customer just expanded from 25,000 seats.
25,000.
To a whopping 60,000.
60,000 seats. That's incredible.
That tells you they're making serious inroads into the enterprise market.
Serious inroads. But it's not all sunshine and rainbows. Their product aimed at software developers.
Monday Dev
isn't growing as quickly as some had hoped.
Right. And this raises an important question about their ability to replicate their success across different market segments.
Different segments, yeah.
The dev market is notoriously competitive.
Notoriously competitive.
And developers have very specific needs.
Very specific.
It'll be interesting to see if they can crack this nut.
Crack this nut. So they're tweaking their go-to-market strategy.
They're tweaking it.
For Monday Dev.
And adding more dev-specific features.
It could mean slower growth in the short term.
Slower growth.
But they're clearly playing the long game here.
Absolutely. And it makes sense.
Yeah.
Sometimes you need to adjust your approach.
Adjust.
Especially when you're targeting a new market.
New market. It'll be interesting to see how these adjustments play out in the coming quarters.
In coming quarters.
But there's a potential bright spot.
Okay.
AI.
Yeah.
Monday.com has been rolling out new AI-powered features.
Right.
And they're seeing strong adoption.
There's strong adoption.
Usage of their AI blocks
is
up a whopping 150% from the previous quarter.
150%.
Wow.
This move into AI could be a game changer for them.
Game changer.
If they can successfully integrate AI into their core offerings.
Integrate it.
And demonstrate tangible value.
Tangible value.
It could give them a significant competitive edge.
Competitive edge.
A significant one.
And here's the kicker.
Okay.
They're planning to monetize those AI features.
Monetize.
In the future, potentially as early as 2025.
2025.
So not only are they embracing AI
to enhance their platform,
but they're also looking at it as a potential revenue driver.
Revenue driver. That's a smart move.
It is.
It aligns with the broader trend. Of businesses embracing AI to boost productivity and streamline workflows.
Boost productivity.
And it shows that they're thinking ahead.
Thinking ahead.
And looking for ways to capitalize on emerging technology.
Emerging technology is smart.
Now, while we're talking leadership.
Oh, yeah.
Their longtime CRO. Yoni Asharov is stepping down at the end of the year.
That's a big change.
Big change, especially since he's been with the company since the early days.
Yeah, the early days.
So it'll be interesting to see who they bring in to fill his shoes.
Big shoes to fill.
They've already started a global search, and they're specifically looking for someone who can help them, continue that push.
Into the enterprise market.
Which
makes sense, considering their success with those larger clients.
Absolutely.
But leadership changes always bring a little bit of uncertainty.
Always a bit of uncertainty, yeah.
A new CRO can bring fresh perspectives and strategies.
Fresh perspectives.
There's always that risk of disruption during a transition.
Disruption, yeah.
It'll be crucial for them to find a leader who can maintain that momentum they've built.
Maintain that momentum, for sure.
Speaking of leadership, they also brought on a new COO, Adi Dar, who has a ton of experience.
Tons of experience.
Scaling global tech companies.
This is a good sign.
What do you make of that move?
Well, I think it signals that they're getting serious about operational efficiency as they grow.
Operational efficiency, okay.
Which is, essential for any company with ambitious plans.
Ambitious plans.
It shows they're thinking about the long-term sustainability of their growth and putting the right people in place.
Right people.
To manage the complexities of scaling a global business.
All right, so we've covered a lot of ground here.
A lot of ground.
To recap, Monday.com is riding high on strong revenue growth, improving retention, and successful product launches.
They're hitting key milestones. Dipping into new markets. And embracing AI.
But they're also facing some challenges. Like concerns about sustained growth and competition in the dev market.
Right. And let's not forget the unknowns.
Right.
The market is a fickle beast.
Fickle.
Things can change quickly.
Very quickly. Remember that stock dip we talked about?
Yeah. Even though they beat earnings expectations this quarter.
They beat them.
The market reacted with caution. So this highlights the delicate balance they need to strike. On one hand, they need to deliver strong financial results to keep investors happy. They also need to demonstrate that their growth is sustainable. And that they have a clear strategy for navigating potential headwinds. Okay.
All right. So what does all this mean for you, our listeners?
Well, if you're following the world of work tech, Monday.com is definitely a company to watch closely. They're disrupting the market, innovating at a rapid pace. And attracting a lot of attention. From both investors and customers.
Exactly. Whether you're a potential customer, an investor, or just someone who likes to keep their finger on the pulse of the tech industry.
The tech industry.
Monday.com's journey is one worth following.
Worth following, for sure.
Now, before we wrap things up,
okay,
it's time for our favorite segment.
Our favorite segment.
This is not financial advice.
Where we throw out a totally outrageous...
outrageous.
But maybe just plausible...
plausible.
trade idea.
Trade idea. Remember, this is purely for entertainment purposes.
Entertainment only.
And we are definitely not financial advisors.
Definitely not.
All right, hit me with your wildestmonday.com trade idea. Okay, so think about this. What if monday.com just goes out and acquires a popular project management app?
Like who?
Like Asana.
Whoa, hold on.
I know it's a bold move.
That's a bold move.
But they're sitting on a mountain of cash.
They are?
This move would consolidate market share, bring in a huge influx of new users, and potentially allow them to increase prices across the board.
I see where you're going with this. It would be a power play, for sure.
It would be a power play.
But also, it'd be a risky and expensive gamble.
Of course, there's risk.
Integrating two large platforms is never easy.
Never easy.
And there's always that chance of cultural clashes and customer churn.
Yeah. But imagine the power of that combined platform.
Yeah.
They could become the undisputed leader in the work management space.
The undisputed leader.
With a massive user base and a comprehensive suite of products.
You would be a game changer.
A total game changer.
I'll admit it's a tempting thought experiment.
It is.
It would certainly shake things up in the market, but ultimately, whether or not they pursue that strategy remains to be seen.
It does, but it's fun to think about.
Oh, absolutely. It's fun to think about.
And that's what makes following these companies so exciting.
Right. And remember, folks, this is all hypothetical.
Hypothetical.
Just for fun.
Just for fun.
We are not financial advisors.
Not financial advice.
And this should not be considered investment advice.
Don't bet the farm.
Do not bet the farm.
Based on our wild speculation.
But it does raise a really important point.
Yeah.
Monday.com is clearly ambitious.
Ambitious.
And they've got the resources to make big moves.
They do.
So whether it's an acquisition, a major new product launch, or something completely unexpected,
we should keep our eyes on them.
They're a company worth watching.
So there you have it.
About Talk Tickers.
Talk Tickers deep dive into monday.com's Q3 2024 earnings call.
We covered the highlights, the potential challenges, and even threw in a crazy trade idea.
For good measure.
For good measure. Hopefully you came away with a better understanding of where they stand today.
Where they stand.
The opportunities they're pursuing and what the future might hold.
What the future holds.
For this dynamic company.
As always, thanks for tuning in to Talk Tickers.
We'll be back next week with another earnings call deep dive.
Until then, keep those tickers talking.